cash flow statement using indirect method. But normally industry prefer indirect method, right? So, but in order to prepare, we have to choose. We make a choices. The first one is direct. Maybe you can choose indirect method. So indirect method, again, we must start with the cash flow from operating activity. If direct method, we have cash received from customer. Now we are not going to do that. We are going to start with the profit before tax. So profit before tax, sama actually is a revenue minus expenses, right? So we are going to have a debit balance if our profit is credit balance or surplus for the year. And then what you need, you have to minus your investment income. So right here, actually you have to deduct your investment income because you are going to get your figure from profit before tax. You are actually working from profit before tax to the profit from operation. So in order to get profit from operation, you have to get your profit before tax. If you have plus, you have to minus. If you have minus finance cost, you have to add back. So that's why you have profit before tax and investment income minus investment income plus financial cost to get profit from operation. So from profit operation, we have to do some process to get the cash flow exactly from profit operation. So we have to eliminate non-cash item. Let's say you have loss on disposal, you have to add because loss on disposal reduce your profit. It is not cash to deduct back to get your non-effect. And then you have depreciation, you have to add back. So you will get your profit before working capital. Then you are going to process the working capital, consists of trade receivable, trade payable, inventory, accrued expenses and prepayment if you have any. Let's say you have increase. How do we know increase? You have to compare the opening balance and closing balance. If there is increase because closing balance in more than opening balance, mean it is outflow. Why? Receivable not paying a lot to you because reduce in payment of receivable mean the cash is not with you, is outflow from your company. And then the other way around, if you have decrease in receivable mean inflow. So how do you get the figure? Simply closing balance minus opening balance. So whatever, which one comes first, but you know how it is debit and credit. So trade payables, same thing goes to trade payable. Trade payable, if this increase mean CD is more than BD, is outflow. Why? Because when it is increase in trade payable, actually CD is more than BD. So what is that supposed to mean, the increase in trade payable? No, I think I got it the other way around. Sorry, let me repeat again. So increase in trade payable actually mean your BCD is more than CD, right? Your CD is more than BD. Therefore, if it is closing balance is more than your opening balance, mean your trade payable increase, mean you don't pay. If you don't pay, it is outflow of the cash. If you don't pay, it is inflow of the cash. So just simply minus both BD and CD. If this increase of trade payable, remember inflow of the cash because you don't pay to the payable. And then you have your inventory. If you have increased inventory, means CD greater than BDU. Which that supposed to mean? Increase inventory because you purchase indirectly, outflow of the cash, right? And the expenses again is your liability. If this increase liability, mean you don't pay inflow of the cash. If it is decrease, you pay the outflow of the cash. And then you have your prepayment. So prepayment the same thing as your inventory. Then end of the day, you will get your cash flow for operation. So cash flow for operation, you're going to work out the same thing exactly. You prepare your direct. You have your interest paid, you have tax paid, outflow of the cash. How do you get this figure? Use your account available under SOFP, process them, then you get your net cash flow from operating activities. Then you have your investing activities. So for the investing activity, the same thing again, exactly the same. You are using or preparing your direct method. End of the day, you have financing activity, then you will get your total of financing, investing and operating. You get your increase in cash and cash equivalent. Therefore, on this orange color, the cash and cash equivalent, you have to add back to last year, beginning of the year, and also you're going to get whatever end of the year. For the cash and cash equivalent, again you have to prepare. So to prepare the cash and cash equivalent, the same thing as you preparing under direct account. And then for the profit before tax, sometimes you have to do some process or some calculation. So you can get the profit before tax from the account retained profit. So retained profit, you have your opening balance, you have closing balance. So you have taxation, reduce your profit, you have transfer, reduce your profit, you have dividend, reduce your profit. Whatever the missing figure is a profit before tax. So use them to prepare your financial cash flow statement, right? So here, in order to prepare the direct indirect method, we propose you some steps so to make your life easier and get full score of your preparation or in your exam. First, you have to post SOP again. Post to the ledger. So take whatever BDCD except cash and cash equivalent, which is posted or transferred to the cash and cash equivalent notes, right? And then you do your adjusting straight away. Yeah, you have to debit credit, and then if you have SOPO, if they provide you SOPO, you take the SOPO, but you take from the bottom. Yeah, so which is from taxation, anti-finance, which you must have debit credit and as well, and also other adjusting debit and credit, and then completing your ledger, prepare your cash flow statement. So that's all under indirect method. Alright, so direct method, most of the time they are asking you to prepare the direct method. You have your notes, but sometimes they also asking for prepare the reconciliation statement. The reconciliation statement somehow is this. Yeah, how are you going to get cash flow for operating activity? By working from profit before tax and processing the figure to non-cash item. End of the day, you get cash flow for operation. That's reconciliation statement. Should be provided as well under direct method. Okay, that's all for today. Thank you.